This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil slipped for a second day on Tuesday as concern over China's plan for growth and uncertainty over the pace of U.S. interest rate cuts offset the prospect of a tighter market due to continued OPEC plus supply restraint. China set an economic growth target for 2024 of around 5%, similar to last year's goal and in line with analysts' expectations, but the lack of big-ticket stimulus plans to prop up its struggling economy disappointed investors. Brent crude fell 42 cents, or 0.5%, to $82.38 a barrel by 12:13 GMT, while U.S. West Texas Intermediate was down 39 cents, or 0.5%, to $78.35. Brent has gained about 7% this year.
One of Turkey's mid-sized Mediterranean oil terminals, the Doğu terminal, will no longer accept Russian imports after receiving record volumes last year, amid an increase in sanctions pressure by the United States. Turkey has become one of the biggest importers of Russian crude and fuel since 2022, after the West imposed sanctions on Moscow for the invasion of Ukraine. Russia responded by rerouting oil away from Europe and the US to Asia, Turkey and Africa. Global Terminal Services, which operates the terminal in Turkey's southeastern Hatay province, said it had told its clients it would not accept any products from Russia.
Moving on to the top news in the energy sector.
China on Tuesday set more stringent energy intensity targets for 2024 after missing last year's goal, as the world's biggest energy consumer tries to keep from falling further behind on its climate targets in a 5-year plan ending in 2025. China is aiming to cut its energy intensity, or the amount of energy used per unit of economic growth, by 2.5% in 2024, higher than last year's missed 2% goal, the National Development and Reform Commission said in a report released at the opening of the annual National People's Congress. China reported last week that its energy intensity fell just 0.5% in 2023. It also missed last year's target to cut carbon emissions per unit of GDP.
Private Indian firms have expressed interest in building at least 10 gigawatts (GW) of coal-fired power capacity over a decade. 4 sources familiar with the matter said, ending a 6-year drought in significant private involvement in the sector. Adani Power, JSW Group and SR Power are among the companies that have told India's power ministry they would be keen to expand old plants or develop stalled projects facing financial stress, according to the sources and a government presentation seen by Reuters. The potential investments, which have not been previously reported, could cumulatively cost billions of dollars and demonstrate renewed appetite in an industry seen by many as financially unattractive. But they also threaten to undermine progress made by the world's number 3 greenhouse gas emitter in weaning its economy off carbon. Next, we have the top news in metal markets. Iron ore futures prices were mixed on Tuesday, as investors digested a raft of key economic targets set by policymakers in top consumer China's annual meeting of the National People's Congress. The most traded May iron ore contract on China's Dalian Commodity Exchange ended daytime trade 0.69% higher at 879 yuan and 50 fen, $122.17, a metric ton. However, the benchmark April iron ore on the Singapore Exchange slipped 1.23% to $114.20 a ton as of 0718 GMT. As widely expected, the Chinese government is targeting economic growth of around 5% this year, similar to last year, and announced plans to run a budget deficit of 3% of economic output compared to 3.8% last year, official reports showed.
Gold notched a record high on Tuesday, as traders ramped up bets of a start to interest rate cut by the U.S. Federal Reserve in June, with investors pouring money into the safe haven asset as the Middle East war drags on. Spot gold climbed 1% to $2,136.69 per ounce by 13:32 GMT. U.S. gold futures jumped 0.9% to $2,145.40 per ounce. Gold last hit a record high of $2,135.40 on December 4. Gold, which is often sought as a safe store of value in times of economic turmoil, benefits from central bank easing as it pushes down bond yields and the dollar, making the metal more attractive.
We will now look at the top news in the agricultural sector.
China on Tuesday sharply expanded its budget to stockpile grains and edible oils this year and stepped up support and policies to boost agricultural production, doubling down on improving food security. The world's biggest buyer of grains and oilseeds wants to reduce its heavy dependence on imports that amount to over 100 million metric tons annually, mostly from the United States and Brazil. China's total agriculture imports totaled $234 billion in 2023. These efforts will help guarantee the incomes of grain growers and motivate major grain-producing areas to stay focused on grain production and further tap their potential for higher yields, the Finance Ministry said in a report released at the start of China's annual meeting of Parliament.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.